Hey everybody, welcome or welcome back. I know that a lot of you still believe that the micro is the most cost-effective way to run a business in France. Even though all of the official documentation does not say that, it says that the micro is an administratively simpler way to run a business in France. But this idea still does persist that if you dare to leave the micro, you will suddenly be hit with these huge income tax bills and huge social charges bills. And I'm not saying that that doesn't happen. It can happen, but it doesn't happen because you've left the micro. It happens because you've chosen an inappropriate business structure to move into. I've made lots of other videos about that. And today all I want to do is show you how the micro compares with a full-size business, because the figures don't lie. Now, of course, we don't have to compare the micro with every kind of other business, and that would be impossible. The micro is an Entreprise Individuelle, but is a mini Entreprise Individuelle. So the only thing we need to compare it with is a full-size Entreprise Individuelle, and that's what we're going to do. Now, a little bit of revision. So when we talk about a full-size Entreprise Individuelle, what does that mean? Well, it means that they declare their professional expenses. They get to deduct all of those, so they have to keep full accounts. So they have their turnover, all of their sales, they deduct all of their running costs, their professional expenses, and then what they're left with is their gross profit. On their gross profit, they then have to pay their cotisation, or their social charges, same thing. This is calculated on their gross profit, and what they're left with once they've done that is their taxable income or their net profit, same thing. Now a micro doesn't get to do that because their social charges are calculated as a fixed percentage of their turnover, and their taxable income is calculated as a fixed percentage of their turnover. And today we're going to work with the example of a micro BIC, because first of all, there are lots of micro BICs out there. I know lots of you are in trades, for example, but mostly because the micro BICs have a lovely round figure of 50% for their tax allowance. So what that means is that the tax office is saying, we expect that the total, let's have a look at this. We expect that the total of your running costs and your cotisation are going to come to 50% of your turnover. And so we're only going to tax you on the remaining 50%. Now, we know what these social charges are going to come to, because that's a fixed percentage, and they're going to come to 22. Now, if you're saying to yourself, it's actually less than that, it's only just above 21, go to the simulator on the URSSAF website and you'll see that if you put in 100 as turnover, then you'll come up with 22 as cotisation. And what that means is that your running costs have to fit into this amount that's left over. And what is that? Well, it's 28. Your running costs cannot exceed 28% of your turnover. If they do, then you're going to be paying tax on money that you don't keep. Now let's compare this to a full-size Entreprise Individuelle with the same turnover and the same running costs. Let's just go with the theory, because the theory is that these two are very comparable. Well, look at this. If this full-size business also has 28% of running costs, then they're also going to pay 22 in cotisation. How do we get to that? We take 100, we deduct the running cost 28, we're left with 72, and we multiply by 31%, and we'll get to 22. And what does that mean? It means they're also taxed on 50% of their turnover, because we take 100, we deduct the running cost, we deduct the cotisation, and what are we left with? We're left with 50. Well, who would have thunk it? It's exactly the same. Now, this is a theory when the two have the same in running costs. But of course, in reality, it's not going to work like that. The reality is that this full-size business is always going to have higher running costs. Now, I've given them 7,000 more in running costs here, or 7% more in running costs here. Why? Well, first of all, they're going to have an accountant. Okay, we can't overlook that. That is an expense. It doesn't have to be a huge expense, and especially if you use dogs. I'm leaving you a link in the description. You can use dogs, and that will not run up your accounting costs by an awful lot. But then they are going to be able to put through their professional expenses costs that this micro is going to have to pay out of their own pocket once they've paid their cotisation and once they've paid their income tax. So things like a percentage of your utilities bills, so gas, water, electricity, internet, telephone, your VPN, your virus protection, all of the things that you still have to pay, they're also going to start contributing to things like prévoyance, which is going to help them if they're ever sick or if they're off work with an accident. So they're going to find more running costs because it's to their advantage to find more running costs. And if they're well advised, then they'll find running costs that they can deduct 100%, and that's going to have the effect of giving them higher expenses and therefore lower cotisation and lower taxable income. And it's going to work out like this. With 7% more in running costs, they end up paying less in cotisation, slightly, but they have considerably less in taxable income. So that's what the reality of the situation looks like. Now let's go the other way, because if this micro has higher expenses, and that can happen for any number of reasons. It could be that the cost of materials has gone up significantly and you have not raised your prices enough to reflect that. It could be that the cost of fuel has gone up significantly and you haven't raised your prices enough to reflect that. It could be that you have accepted more jobs that are further away from home, so you're spending more time driving, less time working, and it makes the job actually longer to do, so you're not doing as many jobs and your pricing hasn't reflected that. It could happen for any number of reasons. Your costs only have to go up by 2%. Here again, this guy, he's still got the 7% more, and that has this effect. It means that now I'm paying 2,000 less in cotisation, and I have even less taxable income than I had before. That's just with a 2% difference. Now, lots of micros say, yeah, I don't have that much in expenses. I am well within. I have much lower expenses. So with lower expenses, let's look. Imagine that your running costs are 25 rather than the 28 that you're allowed. The full-size business is paying the same in cotisation that you are. Look, you've still given him the same 7% extra in running costs. I haven't changed that. Cotisation equal taxable income, he's still winning. And the only way you can win in the micro is by having much lower expenses, absurdly lower expenses, because I don't know of a big activity that could get away with only 15% in running costs. Now we're getting much more into kind of micro B and C type running costs. And even then you wouldn't be winning. But honestly, if you had 15, if you could manage to do that, then even with the 7% extra that this guy's declaring, yes, your micro is going to win in that situation. But I don't know how that exists. So there are two big takeaways with all of this. The first is track your expenses. Even if you can't deduct your expenses, you still need to track them, because if you don't track your expenses, then you don't know how profitable your business is. The second is that whatever anybody tells you, 4 times out of 5, the micro is not cheaper. If you need help moving out of the micro, then please don't hesitate to get in touch. All of my contacts are at the bottom. And if this has been helpful, then don't forget to subscribe. I'll see you again soon.